Hope you're ready for the stock market weekly recap, mass hysteria edition. Let's all continue to freak out as most we can, because it's the best way to get through things is freaking out. So that is why you see the Dow here under 20,000. That's freaking right. On the week, down 17.3. My freaking gosh. Shoot. Crazy stuff. Year to date, down 32.81. So we've eliminated everything we've gotten now since 2017. So you hate to see it. You do hate to see it. From the S&P perspective, S&P 500 down 14.98% this week. Golly. Down 28.66% year to date. You hate to see it. It's just every day got worse and worse. You thought we were going to have a good Thursday? Psych, we did. And then it's Friday. Friday says, screw you. You thought we were going to have a good Friday? Then it says, no. We're going to end off negative. It's just a week of panic, you know. The more that comes out, obviously, President Trump had a press conference every single day, naturally. There's so much going on. There's a lot going on. And I think the government's doing a lot of good things for this economy right now to try to help sustain through this. Obviously, we're going to be there's going to be a lot of spending. There's no doubt about it. As you see, the NASDAQ down 12.6 this week, down 23.33 year to date. But the government's doing everything they can right now to sustain this. I mean, there's no doubt about it. Government's doing everything they can right now, and they're throwing the baby in the bathwater. Is that a thing? I don't know what that. I never understood that one, but I don't know what that means. Baby out with the bathwater, something like that. I don't know what that means, but they're putting everything they can into this, trying to do what they can to fix this issue and make sure it's not as horrible as it could be. So I'm interested to see what more comes. Obviously, we have a huge, very, very eventful week coming up. There's no doubt, and I could see potentially. We'll get into some of this news, but there's a lot more coming for us. No doubt. This is just an interesting one for me, and you see a lot of pessimistic investors, no doubt. The big hedge funds are being very pessimistic. They're the ones that really control the pricing of the stock market. Then you have people like me, who have really only seen bull country. Been invested since 2017. I've only known bull country for the past 3 years, or past 2 years, really. So, to me, this is just an interesting environment, and I think I'm taking it well. I'm very positive about this because it was kind of harder to find deals. When I started to try to add to new positions in last year, it was hard for me to find some deals. We're getting to a point where now this market is valued cheap. I think there's a lot of very cheap valued stocks out there, and I've been certainly adding to my positions very rapidly and creating new positions, all things considered. So I'm very excited about this and all things considered as far as the market's concerned. And I think you should be too, because I think this is a good time to enjoy these deals. If you look at it from a perspective of, all time on the NASDAQ even, which is, crazy stuff to think about, but I personally like to look at the S&P 500 more. All time on the S&P 500, we're at levels that we haven't seen, since 2017, right? But look at the all-time on this. I have this pulled up, so S&P 500 valued at $89, 89.98 or 89.88 points, and in that 20-year span, 40-year span, I should say, up to 2,300 points, at one point over 3,000 points. I mean, there's a lot of long-term, and that's through the dot-com crash, and that's through the financial crisis in 2008, and now this. There's a lot of money to be made in the long term, and that's why, from my perspective, I think there's no doubt that I plan on being, able to retire by age 50. And I think this right here could very much help that plan come true. It really could. So all things considered, I'm okay with this, and you should be too, for sure. For news perspectives, we've got stocks wrapping up the worst week since the 2008 financial crisis. You hate to see that. Where Goldman Sachs thinks that we will be contracting 24% in terms of growth from the U.S., largest quarterly drop in GDP on record, which again makes sense if we shut down everything. What can you expect? Nothing too crazy, but you see, obviously, New York going into a full shutdown, which, and I knew this would be a state-by-state action. California is completely shut down. They're doing a stay-at-home policy. Illinois and New York all doing shutdowns. Connecticut, New Jersey, and Pennsylvania all about to continue with this. These are the places that have been hit hardest by this. They're pretty densely populated. Illinois isn't really in southern Illinois. There's no one really in southern Illinois, but obviously northern Illinois is very densely populated. And I think we're going to get to a point by mid next week, a majority of the states are going to do a mandatory stay-at-home. Now, a mandatory stay-at-home, obviously they will be still operating grocery stores, but they will have to limit the number of people that go in there. By law, they're going to have to limit the number of people that are allowed in grocery stores, as well as pharmacies. So that's going to be an interesting look. As companies like Walmart have to beef up security, I guess, because let's just be honest. This is crazy stuff. I work at a retailer, and we, obviously, as associates of the place, they haven't had a single chance to shop or anything. Obviously, since this, because people are buying out everything. So we gave our associates the opportunity yesterday for a day of shopping before we opened. So early shopping hours for them, so they could go ahead and purchase things they haven't had the chance to purchase. Frankly, it was horrifying on the way out. There were people waiting outside hours before open, like wolves. I had people who were actually physically attacked, people trying to steal the stuff they had purchased. It was crazy. On my way out, I walked out with someone because, I felt like it was the safest idea at that point. And we were absolutely verbally assaulted, just continuously cursed at by these people. It was absolutely crazy. And I've never really seen anything like it. And it just scares me that people react in that negative of a way. And it's not what we're looking for. And it's only going to get worse as this type of stuff comes more common. People are only going to get worse. And I just wish that we supported each other as opposed to trying to attack each other and steal from people. So I'm just hoping that things don't get too crazy with people. But the mass hysteria, that's why it's mass hysteria edition. People have lost their freaking minds, no doubt about it. And I'm about to throw some hands at people if they try to steal my bread when I try to get it. But I buy bread responsibly, not 20 loaves of bread just because you're freaking out and then you have to throw away 19 of those loaves. But anyways, we've got the Bank of England trimming rates, just like we cut rates. They dropped theirs to 0.1%. Obviously, Bank of England probably going to drop it even further as time goes on because they're going to go into a full government shutdown as well, I would assume. You've got food and grocery stocks performing well, and they have. So one thing I would like to point out here, obviously I have Blue Apron up massively. It's one that, well, let's just say I told you so. I told us so. Act like I didn't. You can go see, obviously when I said recession or stock ideas for this, I have a video on it. I mentioned Blue Apron on there. Needless to say, I'm making the bank because of it. No, I was too scared to invest in it. I was too scared. I'm sorry. I messed up. But Walmart's one I want to pinpoint. Walmart has seen so much increased traffic, and investors have noticed it. And this is where investors are flooding their money to. I don't know why I just said that. I don't know why I said it like that, but I said it like that. But investors are flooding their money to these stocks. And you see, let's take a look at Walmart stock. One day, obviously rough here. On the week, the market went down 13% this week. Walmart's up 8%. What? 1 month out, in which the market's down 30%. Am I right? Walmart is only down 4% in a time in which the market is down. That's right, 30%, over 30%, versus Walmart down only 4%. If you look a year out, Walmart is still in the green. Walmart is a stock that is still in the green, up 16%. We're talking about every other stock is down over 25% in this time. I mean, what more do you want to say? Everyone else has lost their gains since 2017. Walmart's up still 70% since 2017. So why is this? Walmart has proven time in and time again that they are a very solid recession play, and people fear that we're going into recession. This is where investors flood their money to, in a time of need. This is what they do, and you're seeing it right now. And a lot of retailers are going to feel this too. Your Targets, your Costco's, they're really going to see a lot more increase in traffic for the time being. And frankly, these stocks are going to, perform. They're going to significantly outperform the market, and that's exciting. You compare it to really the stock market's darling up until the past little while, who is on a 1 month perspective down. That's right, 26%, and this is the stock market's darling. From highs down nearly 30%. They are still green on a yearly perspective, at similar levels to where Walmart's at. But if you talk about recent performance, the stock market's darling in Apple, frankly, sorry, you're not performing nearly as well as Walmart is. It's crazy to think about. And there's many reasons for it. So Walmart is a company that, during the 2008 financial crisis, actually managed to raise earnings per share quite significantly. They see a lot more business during time of recession because they're the cheap retailer. They're the one people go to when they can't go to the high-end places. So Walmart found an increase in revenue. They found an increase in EPS as well. And if we're talking about performance during recession, you see, frankly, during the 2008 recession, the Great Recession, Walmart dropped 33% in a time in which stocks dropped 60%. That is insane. Insane stuff. Can we not also forget, from a dividend perspective, Walmart raised their dividend through the financial crisis. They raised their dividend in a time in which everyone else was halting dividends. Speaking of dividends, that's Walmart for you. That's why Walmart's a good investment during these type of environments. So I'd say if you have Walmart, it's my biggest position by far. So I'm pretty happy through this. Speaking of dividends, Boeing suspends buybacks and dividends. No shocker. Boeing is going to need government support if they're going to even survive this, in all things considered. But you see, a lot of companies are going to start suspending dividends just for the next probably 2 quarters, I would assume. And I'm not surprised by it. But you see a company like Walmart still going to be able to support through that. They'll just be able to support their dividend through it because they print money. So a lot of companies that don't have the strongest balance sheet are going to suspend dividends. And as far as buybacks are concerned, you're going to see every company really canceling buyback because, frankly, the government called for a cancellation of buybacks. They don't want companies buying back stock, so you're going to see a lot of companies cancel buybacks, which at some point not going to hurt the companies that much because they're already getting hammered so bad anyways. So nothing too crazy there. And you have, to wrap up, jobless claims up to 281,000 versus a consensus of 220,000. I just got to be honest here. This is going to skyrocket. These numbers are going to absolutely skyrocket as people start losing their jobs and get laid off because of this. And people will. A lot of small businesses are going to get laid off, or they're going to lay off people because they can't really afford to stay in business. There's a very good stimulus package of $50 billion for small businesses, which is meant to keep people on payroll so people don't lose their jobs. It will have an impact, but not the biggest impact in the world. So you're going to see jobless claims rise quite a bit, and you'll see a unemployment rate rise quite a bit. It's crazy after having record unemployment for the longest time. People are now um, gonna say it's what it's been the whole time, but all things considered, we're okay. We'll make it through this, guys. There's no doubt about it. Just please, we gotta stay positive during this and support each other. That's really all I got for you. But hope you enjoy.